What is up, guys? Taiki here. Today I'd like to go over how you should be thinking about yield farming in a potential bear market. If you like the content, please like and subscribe, leave a comment in the comment section below. So let's get started. So I made the same exact video roughly a month ago when Bitcoin first capitulated below $30,000, and this morning I woke up to Bitcoin under 29K, and I'm sure people are scared, people want answers, so I just thought it would be good to just rehash the same video about like how you should be like putting your capital to work in a potential bear market, because we have to at least entertain the possibility that we are in one, right? Though your favorite influencer might be saying that we're gonna go up from here, buy the dip, etc. If you're not prepared for all outcomes, then you're just not thinking for yourself, right? Because in this type of environment, traders, they're gonna feel the pain, right? And the only thing that's gonna be in a bull market is the number of McDonald's applications. And as farmers, we have to think about things differently, because most farmers, they're more heavy in, I guess, their stablecoin stack, right? Because we want to generate yield on our assets and, I guess, outperform the market in a sideways or a bear market. The analogy I like to use for the farmer reference is that, if you have a farm that you love, right? It's doing really well, it's generating cash flow, organic cabbage doing really, really well. And you watch the news and there's a potential storm coming, right? Are you just gonna go full Wojak and just not do anything about it and hope nothing happens? Or are you gonna at least plan for the possibility that this storm can potentially wreck your farm, right? I like to do that, right? I want to plan for all possibilities. So what do? I buy farmers insurance, because we are farmers. Bum ba-dum bum 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 bum. We have to prepare that the storm could destroy our crop, right? So in this case, when I think about insurance for crypto and stablecoin farming, it's to de-risk your portfolio, maybe go into safer assets, whether that be stablecoins, Bitcoin, or ETH, right? Because yes, they might underperform to the upside, but indeed on the downside, they're definitely going to overperform these altcoins. Bitcoin might be like down 5% right now, but your favorite altcoin might be down 10, 15, 20%, right? And it's really good to just at least de-risk your portfolio, even if you are bullish on crypto in the long term. And I guess loading up on stablecoins can be thought of as like loading up on supplies right before a storm is coming, because if Amazon can't deliver you some rakes and hoes and some seeds, then your farm is good as gone, right? So even though I'm relatively stablecoin heavy, I did buy some more Bitcoin. I de-risked some of my altcoins, and if Bitcoin dumps further, then I'll probably be buying the blood on ETH, and then if it dumps even more, I'll be buying the blood on altcoins. That's how I'm approaching the markets. So in terms of, I guess, thinking about farming in a bear market, here are the three things that three things that I'll go over in the rest of the video. First, setting some personal goals, because if you don't have a plan, if you don't have goals, then you don't really know how to react, right, when things don't go well for you. Then I'll go over why I think Polygon is still the place to be. This was the case a month ago, like definitely. It's as like more chains and like other layer 2s come online, this might not be the case, but for now, like on June 22nd, I still think Polygon is the place to be. And then also look into how you should be thinking about other layer 2s or other layer 1s. So let's set some personal goals so we can work towards it, right? Because that's the point of goals. You want to set goals when you're rational. You want to set goals not when your portfolio is down 10%, but in a more calm environment, so you're not panicking and you're thinking rationally. So I believe as a farmer, these are the three broad goals you should have if we're entering a bear. And this also applies to a bull market too, but I think it's better to think about this in a bear market. So first, you want to identify your favorite coins and find ways to think about, okay, how do I stack as many coins as I can for this particular coin that I like, right? Or you can also stack dollars, right? You can just generate yield and accumulate more dollars, because I guess yeah, when coins go down, you can buy more coins with dollars, right? That's just how math works. Or you can just farm speculative positions, and I'll go over an example of what I did recently of how this can be beneficial for you. So for me, I've identified 5 coins that I really want to accumulate in a bear market. First being Bitcoin, right? Bitcoin is here to stay, as well as ETH, right? These are the 2 coins that if you're bullish on crypto and you want to express your bullishness towards it, Bitcoin and ETH are relatively safe bets. So I've been accumulating Bitcoin, And now that I've reached my personal goals for how much Bitcoin I want to own, I'll be moving over to ETH because hopefully I can accumulate 32 ETH at some point because I want to stake it. I'm not there yet, obviously. I'm not there yet, but that's my goal. So I've accumulated Bitcoin. Now I'm going over to ETH, and 32 ETH is my goal. Then I want to accumulate more Chainlink, right? I'm not going to go over like the fundamental reasons of like why I like Chainlink and Aave, but I'm sure if you've used Polygon, you kind of understand the power of Aave and why it's superior to the bank experience. And then, after I accumulate Chainlink and Aave, enough amounts that I'm comfortable with, I'll just be stacking Doge below a penny and only below a penny, maybe even below half a cent, because I do think Doge has like these crazy cycles, and I just want to accumulate as much of Doge as I can after I've actually built out my entire portfolio. And I mean, you don't have to actually follow like the same portfolio I'm doing, right? You have to do your own research because none of this is financial advice. But if you're unsure and you still are doing research, maybe it's best to stack more dollars so you can buy the dip and just dollar cost average into your favorite coins. So let me go over an example of a speculative position that I formed with dollars, which I've sold for an asset that I actually want, right? Bitcoin. So this is something called QiDao. I went over it many times in my other videos, so I'm not going to go over the fundamental reasons why, but this is essentially what I've done. So I took my stable coins for the past 3 to 4 weeks, and I farmed 1,000 Qi tokens with stable coins, mostly in this area, right, from mid-May to early June. And then I sold 3/4 of my position for Bitcoin, right? So I sold it roughly at like 290. So I was able to, I guess, buy 2.2K worth of Bitcoin. So if you think about it, I farmed a speculative position, which I thought had some fundamental value. And I farmed it when no one was looking, right? I started farming in like mid to late May. Like this is May 24th. You can see that I had $10,000 roughly farming Qi tokens. And on May 30th, you see that when the price of Qi token was roughly 36 cents, I almost had 900 Qi tokens, right? So I did the fundamental research. I found this asset that had potential, and I farmed it, right? Because I thought it could go up in value in the future. But now that it's gone up, I don't want to marry this farm token because it could go to zero. Like I would not be surprised. But I took 3/4 of it, bought Bitcoin, and I kept the other 250 as a moon bag in case it does go up, right? Because I do think it has some fundamentals. And this was my most recent live stream on June 19th, where I said I had almost 1,000 Qi tokens, and I said I'll stop farming it after I reach 1,000. I reach 1,000, I sold 750. I have 250. I'm gonna stake it, and then I'm moving my dollars elsewhere. So that's one of the mindsets too. It's like do your own research, identify coins that could go up in value, and maybe that's something that you want to just build a position in, just like farming it, right? And I mean, I like earning 2.2K worth of Bitcoin in 3 to 4 weeks with dollars, and also having a bag that as a moon bag that could go up. I think that's a pretty good position that I put myself in. All right, so now that we have a plan, right? Depending on what your plan is, I have my own plan. So let's strategize on how we can get there. So, like I mentioned, I do think Polygon-matic is still the place to be when Arbitrum comes, whenever that comes, and if Fantom, I guess, gets more dollars or gets more volume, more liquidity, this fact might change. But even though the rates have gone down a lot, I do think Polygon and Matic is still the place to be. Yeah, and whenever Arbitrum comes, I'll probably be moving my assets there. Optimism as well. It's supposed to come out in July, right? So there is potential of, I guess, a good farm, good farm summer, right? In June, July, or August, depending on how good these layer 2 rollouts are. And then there are other chains that I am looking into. Fantom, Avalanche, Solana, Harmony. I think Fantom is the one that has the most potential. I think Solana is good as well, but I think Solana is going to take more time for the entire ecosystem to get started. I'm not going to, feel free to argue with me in the comments below, but yeah, I kind of went over why Fantom is good. First of all, it's EVM compatible, so developers can just take code existing on Ethereum and port it over, whereas Solana is not. And one thing that I think is underappreciated is that even though the stablecoin yields on Polygon and Ethereum are down a lot, it's pretty high on Fantom. This reason alone is not enough for me to want to go through the trouble of bridging my funds over, but you can earn 10-15% on stablecoins on Fantom, right? Maybe these yields will go down as more and more people learn about it. But if you want to farm Curve, then this might be a way to do it. Yeah, and in my live stream on Sunday or on Saturday, I went over why I'm not interested in Fantom as of now, just because there's not a trusted money market, right? There's no app like Aave or Compound on Fantom, and I do think it's really important for these ecosystems to have a trusted and reliable money market. Yes, there is Cream, but I don't think the market really trusts Cream right now, and you can kind of see that by the amount of TVL it has. I think it has like roughly $15 million, which is nothing, right, compared to Aave's $5 billion or whatever it is. So yeah, let's see. Yeah, Aave has $4.5 billion, which is still a lot. It's down from like, I think at the peak it had like 8 or 9 billion, but yeah, it's down a lot because, which is, I mean, $4.5 billion is still a lot. But as you can see, I de-risked my portfolio. I bought some more Bitcoin this morning. I got it below 30K, which is pretty nice. Hopefully that holds. But if not, I have a stablecoin stack that I'm okay. Just dollar cost averaging in. And yeah, like I said, I've already reached my goal in terms of like how much Bitcoin I want to accumulate. So now my focus is going to be on accumulating Ethereum, Chainlink, and Aave. And a lot of people have DM'd me saying like, oh no, like these yields are down. Now you can only earn like 5% on your dollars. I mean, I think we've all been spoiled by like the amazing rates that Polygon gave us. But if you compare 5% to like whatever your bank is giving you, it's still pretty good. But the good thing is Polygon and Curve, they're going to also roll out another yield farming, I guess, rewards program by matching Curve rewards up to 6 million USD in Matic for the next 16 weeks. I believe these aren't rolled out yet. The initial thing was $5 million, and now they're saying $6 million, right? And Curve is set to also increase their rewards as well, right? So it says Curve is to be announced. It's going to be expected 24th of June. So, just keep your eyes on Curve. I do think Curve is still a really good place for newer players to just like use DeFi and earn a yield on your dollars. And something that I think a lot of people underappreciate is like the farms on Quickswap, right? Providing liquidity. This is page 1, but I mean, you can earn pretty good yield, right? For ETH USDC, ETH Matic, Bitcoin ETH, and Aave ETH, right? This is something I'm looking into, right? Aave ETH, because I want to own these assets anyways, so I might as well generate yield. And even though I might incur some impermanent loss, I mean, these two are assets I want to own, so like I wouldn't be too worried, and I'm hoping that the fees can make up for it and the rewards. Yeah, and this is also something I'm looking at, Bitcoin USDC, just because I have a lot of USDC, I have a lot of Bitcoin. I might just match these two and generate 100% APY. Hopefully these rates don't just die off as soon as I release this video. But just look into Quickswap. I think it's one of the better farms that's really underappreciated. And also, I didn't really talk about Adamant just because they don't have. I guess their code is pretty complex, and the Rug Doctor couldn't really audit it. But I've heard good things about it, so I might put some money on ETH Aave and just let it hyper compound, or let it auto compound. I'm not going to do this with too much of my capital, like maybe 10% on my book, just because of the risks involved. But I've heard good things, and it seems like something that I'm interested in, right? So as you can see, like I'm not in a rush to deploy my capital, right? I'm just like, there's nothing wrong with like just sitting on your capital for like a few days just to figure things out, and as you wait for these rewards to come out, because this is coming out June 24th, right? So why would I just like rush to like deploy, like provide liquidity on Quickswap when this thing can come out on the 24th of June? Also, we know that 0x and Polygon, they're going to have a $10 million program, right? There wasn't any date that was listed on here. But, these are liquidity mining rewards for providing liquidity. Also, Kyber network as well. They have a $30 million program coming out the 30th of June. I believe only $5.5 million will be allocated to the Polygon ecosystem and $25 million to the Ethereum ecosystem. But, these are still good because, I mean, this program is going to run for 2 months. So, like, all the rewards will be concentrated in the 2-month span. So, I'm sure that the rates will be high. So even though it might not seem like these rates are great in the short term, like I would just, I guess, advise people to be patient, and there's nothing wrong with just earning low yield for a few days, because in the grand scheme of things, like, that's nothing. And to be honest, like, maybe you should be taking this time to just come up with a plan, right? Because I already have a plan, right? And I've laid it out. I want to stack these coins. I've already stacked a lot of Bitcoin recently. Like in June, I was just like buying Bitcoin during the dip. And now that Ethereum is getting crushed, I'm going to be focusing on this and Chainlink and Aave. I'm just focused on Aave right now just because it has better forms than Link right now, right? 36% here, 56% here. And if you hike for a compound, you can get more. So I'm not doing this right now just because, I'm just like waiting for these curve rewards to come online. And then I'll come up with a decision. But that's how I'm viewing the markets. Have a plan, work towards that plan, and as long as you have a plan, then you're not going to panic. Like my portfolio has taken a huge hit, right? But I have a plan, and I'm just taking this opportunity to just like accumulate more coins that I want to own. So if you like the content, please like and subscribe. Leave a comment in the comment section below, and let me know what you're doing with your assets. Thank you for watching, and have fun farming.